The Capital Markets Master Plan. Over the years, the capital market has served as a key driving force for economic prosperity in Kenya. The implementation of the Capital Market Master Plan will transfuse and embed into the Kenyan capital market the DNA necessary to transform an economy that is on the verge of takeoff. This metamorphosis, to be achieved locally and projected regionally and internationally, is hinged on three key pillars. The first pillar involves providing support for development and economic transformation initiatives. Under this pillar, the capital market will raise long-term finance for vital nationwide infrastructure projects such as bigger hospitals, better road and transport networks, bigger schools, irrigation projects, power generation and distribution, wealth creation from mining and oil exploration, as well as expanded and efficient seaports. Businesses at county and national levels will also benefit from long-term finance for growth and expansion, and consequently increase employment creation. As a result of the development of new forms of funding such as project-based borrowing for counties and, where appropriate, county bonds, commodities and derivatives markets, private equity and venture capital financing, investors will have access to a wider range of investment products. Regional investors will also be able to access a single East African capital market, meaning that one can buy shares listed on any East African exchange from any country within the East African community. Additionally, market intermediaries can access any securities exchange within the EAC bloc and serve customers all over the region, thereby reducing management, compliance, and IT costs for market intermediaries and increased investor confidence as a result of information sharing among capital market regulators globally. The second pillar involves strengthening the existing capital market infrastructure to ensure alignment to international best practice. This will result in positioning Kenya as an attractive investment destination for international and experienced investors. Other benefits include better prices for farmers, increased food security, a secure central record of ownership of securities, more experienced and highly qualified labor force, providing world-class service to local and international investors, and low costs of ownership and trading of securities. The third pillar seeks to inspire confidence and encourage innovation in the markets through sound and robust legal and regulatory environment. Ultimately, these regulations will support market development through good corporate governance and financial reporting, improved stakeholder participation and consultation process, and integrated financial regulations. The overriding benefit is that Nairobi will become a strong domestic and regional financial center that is attractive to international firms and investors, and with access to international markets. This will lead to the attainment of Nairobi as an international financial center, a Vision 2030 flagship project under the economic pillar. Kenya's capital markets will become a center of excellence in commodities and derivatives, construction and real estate development, technology services and financial inclusion, infrastructure finance, and financial services. This will transform our nation into the heart of the African capital markets.